All right, welcome to The Explainer. Today, we're talking about a threat that doesn't exactly storm the castle walls. Nah, this one creeps in from the inside, quietly siphoning money from a business. We're going to show you how to stop it by building a financial fortress so strong, not a single penny gets out without your say-so.
So, just for a second, think about your own company. Could it be silently leaking money? It's way more common than you'd think. And here's the really scary part. The leaks often start with the people you trust the most, the ones who know exactly where the cracks in your defenses are.
You see, billing fraud is this incredibly common but hidden threat that can go on for years without anyone noticing. So in this explainer, we are pulling back the curtain. First, we'll dive into the fraudster's playbook, and then we're going to show you step by step how to build your fortress against it.
Let's get started. You can't build a proper fortress if you don't know how the enemy attacks, right? So let's get inside their heads. We're going to look at the 3 most common plays in the fraudster's playbook, because once you know their moves, you can start planning your counter moves. Okay, first up, we've got the shell company scheme. This one's a total classic. An employee just invents a company. It only exists on paper. Let's call it Vendor X. They then submit these totally phony invoices for services that never happened, approve the payment, and boom, company money gets funneled right into their own bank account. Then you've got the pay and return scheme. Now this one is so sneaky because it uses a real, completely innocent vendor. The fraudster intentionally overpays a legitimate invoice, say pays a $5,000 bill twice. When that honest vendor sends the $5,000 refund check back to the company, the employee is just waiting to snatch it from the mail and cash it for themselves. And the third one, probably the most straightforward, is the personal purchase scheme. This is pretty much what it sounds like. An employee uses the company credit card to buy things for themselves, a new laptop, a fancy vacation, and then just buries it in the accounting system, labeling it a business expense, hoping nobody looks too closely at the receipts. Okay, so we've seen the tactics. We know what they're doing. Now it's our turn. It's time to build our fortress. And we're going to construct this thing piece by piece, starting with the absolute most critical part, the foundation.
The absolute #1 cornerstone of all fraud prevention is a simple but powerful idea called separation of duties. Basically, it means that no single person should ever control a financial transaction from beginning to end. Think about it. If one person can order something, approve the invoice for it, and cut the check, you've basically just left the vault door wide open.
And here's what that looks like in the real world. You see here, the person who authorizes a purchase cannot be the same person who processes the invoice. The team in the warehouse that logs the incoming goods cannot be the ones approving payments. Every department acts as a check and balance on the others. It's like having 3 different guards. One guard holds the key, another guard watches the gate, and a third one protects the treasure. No one person can do it all.
Now, with that foundation in place, we can build the actual fortress walls. These are your core controls. First, you need a master file of approved vendors. This stops those shell companies cold. Next, you have to lock down who can even change the information in that file. And here's a really powerful one. Require mandatory vacations. I know, it sounds a little strange, but active fraud needs constant attention. When the fraudster is forced to be away, their whole scheme can unravel really fast.
So, your walls are built, they're strong. But a fortress is only as strong as the guards at the gates, right? So who's watching the money flowing out of your company? Let's talk about the gatekeepers. This right here is probably the single most important gatekeeper you can have. It's called the 3-way match. Before any payment goes out the door, 3 documents have to line up perfectly. First, the purchase order. That's what you agreed to buy. Second, the receiving report. That's what you actually got. And third, the vendor invoice. That's what they're asking you to pay. If those 3 things don't match up, the payment stops. The gate stays closed. Simple as that.
Now, when it comes to adding a new vendor into your system so you can pay them, what's the magic number? It's 2. Always require dual approval. 2 people. This one simple rule makes it incredibly difficult for a single employee to set up a fake company and just start paying themselves.
And here are a few more really essential gatekeeper rules. Big purchase, it's got to have multiple levels of approval. Company credit cards, they need hard spending limits, and you need a clear business purpose for every single charge, no exceptions. And to shut down those pay and return schemes we talked about, you have to match your records of returned items to the credit memos from the vendor.
That closes the loop so no one can intercept a refund.
Okay, your fortress is built, your gates are guarded. Now we need a watchtower. We need to learn how to spot the signs of trouble from a distance. All those little red flags that tell you a fraud might be happening right under your nose.
So you're up in the watchtower. You're learning to spot trouble. And you can start by just playing detective with the evidence itself, the invoices. You got to look closely. Do they feel right? A lot of the time, the clues are hiding in plain sight.
What's so interesting is how simple these red flags can be. Is the invoice super vague, like it just says, consulting services? Red flag. Is there no phone number or a physical address? Does it look like it's been messed with, with whiteout or erasers? An appeal box address isn't automatically bad, but it's a huge signal that you need to stop and verify that the vendor is actually real.
And hey, you want a great pro tip from actual fraud examiners? Check if the invoice is folded. Seriously, a perfectly flat, unfolded invoice might mean it was never actually put in an envelope and mailed by the vendor. It could have been printed by an employee inside the building and just slipped directly into the payment pile. It's such a subtle but really powerful clue.
Beyond just the invoice itself, you got to look at the vendor's profile. You're looking for patterns. On the one hand, you have your legitimate partners. They're known in your industry. Their pricing is fair. Their activity is consistent. But on the other hand, you have the red flags. A supplier nobody's ever heard of, prices that are always way higher than everyone else's, or a sudden massive spike in invoices. Those are the patterns that should make you say, hold on, what's going on here?
And finally, remember that some of the biggest red flags aren't on paper at all. They're in people and in data patterns. Has an employee suddenly started living a lifestyle that their salary just can't explain? Is the same person always the one approving payments to brand new, unknown vendors? A quick look at the data can show you if purchases from one supplier are suddenly going through the roof. These are the signals you're looking for from the watchtower.
So, we've gone through the fraudster's playbook. We've built the walls, guarded the gates, and we've put lookouts in the watchtower. Let's bring it all home with one final, crucial takeaway.
Here it is. Real security isn't about one lock or a single policy. It's a whole system of layered defenses. You need those structural walls, like separating duties. You need the procedural gatekeepers, like that three-way match. And you need the vigilant watchtowers, spotting red flags. Each layer supports the others, and that's what creates a truly secure fortress.
And that leaves us with one last provocative question to ask yourself. When you look at your own organization, which part of your fortress is weakest? Is it the walls, the gates, or the watchtower? Because identifying that weakness, that's the very first step to making sure it's secure for good.